2015 summer webinar. It will feature mainly folks from the Utah Insurance Department Captive Division. I'll go ahead and give a few welcome remarks, and then we'll turn the time over to Pam Sanchez, and she'll speak of the, and if you'll go ahead and go to the next slide, please. Thank you. Pam will speak to the results of the 2015 changes in the captive legislation, including an important point, as it's going to, the UID will now have a statement as regarding what the role of the captive manager is. Pam will continue on with new and upcoming innovations in technology for Utah captives. I think all of those in the captive business will be very welcome to see these things. Thirdly, Mark Wiedemann will speak to trending exams and analysis issue. Then Dave Snowball will speak to the various proposals that are in front of the NAIC. And we're all a little concerned about how much the the National Association of Insurance Commissioners will be getting into the captive business. And then I'll finish up with Utah Captive Insurance Association business regarding a new slate of board nominees and a future officer roster, as well as mentioning a little bit about the Western Region Captive Insurance Conference offering in 2016. So Pam, if you wouldn't mind just going forward from here, that'd be great.
Thank you, John, and thanks to everyone that's joining our webinar today. We really hope that you find today's information useful. I'm going to start by mentioning that we have added LLC language to our code. LLCs were already an approved form for captive, but our code didn't have specific structure and direction for LLCs. I want to clarify that all we did was clarify how to organize and create an LLC captive. LLC captives need to be a manager-managed LLC, so they'll function very similarly to a stock corporation. For more direction, you can refer to Code Section 31A 37301. We've increased the exam cycle from a 3-year to a 5-year period in an effort to more closely match the traditional insurance side. We still have the ability to call an exam sooner if we feel like that's needed, and we are still open to the option of audit and lose. Now I want to talk about capital requirements. The prior language of our code regarding capitalization created confusion in terms of what was defined as paid-in capital and free surplus when it's really the same thing. We wanted to make this easier, so we changed our code to allow for capital requirements to now be able to be satisfied in any combination of paid-in capital and free surplus, but we still have the $250,000 minimum requirement. You may recall that before this change, we required $100,000 in paid-in capital and $150,000 in free surplus. Again, this can now be satisfied in any combination as long as there is a minimum of $250,000. I also want to note that we've allowed for $0 par value for stock companies. The change to capitalization requirements for sales sponsors is still $1 million, but only $350,000 must be provided by the sponsor, and the remaining portion can now be provided by the sale companies. Another noteworthy change is that pooling can now take place within the sponsor of a sale. Sponsors can write direct business without a fronting company, and the reason for this change was that we wanted to make it easier for sponsors to do business, and we wanted to give clarification for sales. Sales can also have LLCs and stocks companies. Okay, I'm going to talk about one change that will affect all of our sales, and that's that we now have a $1,000 initial license fee due on formation plus a $200 non-refundable fee. for the application. And we'll also be charging a $1,000 renewal fee for each cell. And we're not applying the e-commerce fee. This wraps up the 2015 changes in the captive legislation. We believe these changes will help give clarification where it was needed and help us to better serve you. Okay, and as John mentioned, we've proposed a captive manager definition. Now, just to let you know, this isn't anything new. It's just clarification to define the terms to use in the code that will become official in October. What we've proposed for the captive insurance manager is an organization that is on the Utah-approved captive management firms list, pursuant to a written contract with a captive insurance company, provides and coordinates services including but not limited to accounting, statutory filings, signed annual statements, coordination of related services, and acts as an intermediary that facilitates and assists the captive in meeting its statutory requirements under Title 31A. Now I'm going to talk about provider applications. In order for us to approve a new provider to be an approved actuary, auditor, or captive manager, we'll require that they have at least 2 years of insurance experience. For auditors and managers, this can be insurance in the traditional side or captive insurance experience. And for actuaries, we require that they have the proper credentials. We have put this 2-year experience requirement in place to help us ensure that providers are qualified. I'm now going to turn the time over to Dave Snowball so that he can talk about what we're anticipating will be coming up in the next legislative session.
Pam, this is John. One thing to mention, we do have a message board open, so all participants on this call can submit questions electronically through that. They're readable to all of the presenters, and they will either be answered throughout the session or we may hold some to the end. We should also mention that all call-in participants that are presenters ask you to mute your phones at the time that you are not presenting. Sorry about that, and please, Dave, go right ahead.
Thank you, John, and thank you, Pam. I just want to take just a few moments. We're just getting ready to turn over legislative things for the coming year. I wish I could have done this a little sooner so that you could have a little more input. We are to the point now where this coming Friday we submit for preliminary approvals going through the legislature. And so what we've got currently on is the things that will happen this year. We really encourage you to submit either through our legislature or through our department, and we will submit it to the legislature. In the future, any ideas or thoughts or concerns that you would like to see in our legislation. So feel free to contact us and make sure that we have the opportunity to work with you on how we design future laws and code for our captives. This coming year for this 2016 legislation, there's 4 primary things we're looking at. One is for a branch captive, we're just changing that so that it will not just be an alien being defined as a foreign domicile. We can do a branch here in Utah, but also for any outside of Utah would be considered a foreign, and we're changing the language to have that fit. The pooling language, we're just going to clarify that a little bit so that we are comfortable that we're meeting the guidelines for pools, so that there's no question about controlled unaffiliated business in relationship to a pool and how all of that falls together. One other thing that we're looking at, and there's still a long ways to go on all of these, in fact, to make sure they get approved, but there's some language we're talking about actually putting in LLC series LLC legislation. From what I can see at this point, it'll look very much like a sponsored sale, but it will have different characteristics of a series LLC structure probably have lower minimum requirements for the capital requirement. Probably looking at a $50,000 minimum with or 4 to 1 ratio with premiums. So that will whichever is higher on that. The last thing that we're looking at, or one of the things we're looking at too, is NAIC passed the RRG Model Act some time ago, and we're at this point trying to implement that into our code so that we can make sure we meet the accreditation standards coming in 2017. So that's the things that we're looking at going forward. And now I'll pass it back to Pam so that she can talk about some innovations that are coming up.
Thank you, Dave. Okay, I am going to talk about the new technology, as Dave mentioned. We're trying to improve our technological abilities and trying to create efficiencies wherever possible. So we've established some new technology for submitting documents. We've developed an online portal where you can fill out and submit the annual statement and statement of economic benefit. We're requiring that all annual statements and statements of economic benefit be submitted online. In fact, we don't want any paper submissions at all. We ask that all audit and requests come in digitally. We want to make things easier for you and for us, so we're trying to go digital as much as possible. We have a captive division email where you can send all documents to, and that email address is captive@utah.gov. We've also launched a secure online payment portal that gives you the ability and convenience of making the license renewal payments online. If for any reason, however, you are unable to pay online, we also have the option for you to pay by telephone with a credit card. I'm going to walk you through how to make payments online. You will need to go to our website at captive.utah.gov. From there, you'll click on the Licensing and Forms tab and scroll down to Captive Renewal Forms. And you'll click on the Captive Renewal link, which will take you to our company licensing renewal system, where you can click on Renew and enter the payer ID, which is the org ID or the company ID we issue to each captive on formation, and it's, for most captives, printed on the COA. To finalize payment, the system will ask you for the invoice number, and you should be set to make the payment. We're working on having the ability to fill out the new captive applications online by mid-November. This system will allow you to fill out the applications online, similar to how you filled out the annual statements this year and how the service provider applications are submitted. We're not requiring that you use the system, but we highly encourage you to use it so that we can work on making improvements where needed and before we make it a requirement. And we appreciate your patience on this and appreciate your help in using it before it's required. I also want to mention that this will be the one fee that you will not be able to pay online, so keep that in mind, that payments for applications will need to come in how it has always come in, via check. We're also working on developing an online submission portal so that you have one place to submit documents and we have one place to look. Again, we're trying to make things as easy as possible for you to do business with us. This will be a secured site where you can upload documents that relate to your requests, audits, FAOs, or any document you need us to have. We will require that you use the system in 2006. As far as technological innovations, that is everything, and I'm now going to turn the time over to Mark so that he can talk about exam and analysis issues.
Thank you very much, Pam. Before I begin, I just want to express our appreciation for the efforts our providers put forth on behalf of the captives. We realize the amount of time that goes into what you do, and we are grateful for the positive impact it has for our captives. I would like to spend a few minutes discussing some trending items that we are seeing as we are doing our exams and reviews. I'd like to start by discussing the minimum cash and cash equivalents. One of the primary concerns that we have when we do our reviews is obviously the solvency of our captives. We want to make sure that they are on solid footing. The statutory minimum cash and cash equivalents, as listed on this slide, are not recommended balances to be in the captive account at the end of the year. However, they should be balances that are maintained throughout the year. As audits are done by our designated CPAs, it's requested the testing is not only done as of year end, but also as of month end to ensure those minimum balances are maintained throughout the year. In regards to loans, this seems to be one of the big trouble spots that we have, and an area where we will tend to see the most abuse. We understand that the company sometimes needs cash to operate effectively, and a way to get that money is through loans from the captive. After all, we understand that it is your money and you should be able to get it when you need it. However, keep in mind that cash in an insurance environment is considered regulated funds, and the purpose is to make sure insurance obligations are being met. We want to make sure that the captive is not being used as a holding company per se. To emphasize, the captive must have pre-approval from the Utah Insurance Department before issuing loans to parents or affiliates. And if you look at the Utah code as referenced here, our code does require that for any balances of the material nature, a narrative description of these issues should be provided. We want to be able to see what impact any material transactions are having on the captive. And for clarification, a narrative does not necessarily mean just a bullet point list of items, but rather an actual description of material items that may impact the financial statements. We realize that sometimes differences are going to exist between the annual statement and the annual audits. In situations like this, the variance report is crucial for understanding of how any of those adjustments may impact the financial statements overall. If a general description of an adjustment, such as audit adjustment or reclassification, is given, it makes the task more difficult for us. We ask that a more detailed description be given to the items on the variance report. As you see on the slide, in the remarks column are some good examples of the kind of things that we are hoping to see when variance reports are issued. Timely payments of premiums. We are seeing that in some cases, premium payments are not being made according to the contractual arrangements in the current policy year. This is resulting in an increase of premium receivable balances on the financial statements. Typically, premium payments for a given policy year should be paid during the course of that same policy year. Obviously, excessive receivable balances can have an adverse impact on the captive and should be minimized. As needed, if we see a premium receivable balance is constantly increasing, we may ask for some kind of an aging schedule or document so that we could see to which policy year those balances pertain. Breakout on lines of coverage. We need to have lines of coverage broken out on the annual statement as opposed to general inclusive line item descriptions such as all other coverages. For example, if lines are directly written, please break those out on the statement along with the applicable information. For assumed or pooled lines, we want to see an itemized listing of what coverages are directly related to the insured. other line items or other coverages within a pooled organization can be listed as more of the general descriptive, as we've seen before. Moving forward, seeing what activity has taken place in the prior year is very important when we do our analysis. Please make sure the annual statement includes the numbers from the previous year. We realize that with the new program this year, those amounts weren't automatically populated, but going forward, those amounts should carry over and be automatically populated in subsequent reports. If there is an issue with the automatic carryover, the fields that are presented will be able to be edited so that any changes can also be made manually as well. It is inappropriate, as the slide indicates, to retroactively add line and limit adjustments at the end of the year. This raises concerns when the request is being submitted toward the end of the policy year, that it makes it look like the company is looks like the company is trying to cover for claims that have occurred during the policy year, which could be construed to be more of a reimbursement program, which is not allowed. A small period of time between the request and effective date may be appropriate and approved, but only upon review and only on a case-by-case basis. At this point, I'd like to thank you for your time, and I'm going to turn the presentation over to Dave a little bit to discuss some more information as it relates to the NAIC.
Thank you, Mark. I'd like to just take a moment and review some of the things that have happened with the NAIC in relationship to the XXX, AXXX. I think most of you are aware of what's kind of happened, so I'll just briefly do a quick history. In the fall of 2013, the NAIC's F committee, that's the accreditation committee, discussed a proposal for defining the multi-state reinsurer. And in the preamble, A and B have talked about what the definition is, and it was very broad in its approach. And if it had passed as it was stated at that time, it would affect most of our captives that do any reinsurance. And so that would be a major issue for the industry. Well, in May of 2015, the F committee adopted some technical changes to the preamble, those were presented by UCIA and some of the other groups that had been working on this. And then in Chicago, just this last week, 2 weekends ago, they've finalized some things. It's down to the point where they've submitted the final draft for comment, and anticipate, I think it's open for like 30 days, and at which time they'll finalize if there's not any major issues that are brought up. And that's relating specifically, and only the AXXX and the XXX captives are involved in that. That's referring to life insurance captive insurance companies that have put their some of their policies in a captive, which are commonly referred to as XXX, AXXX. So that's right on the verge of happening. Just one other comment. Some of the discussions that have taken place are also including long-term care coverages, and also annuities. And so both of those are still under discussion, and anticipated that those will also be included in the definition along with the XXX, AXXX captives. Just want to take just a moment also to review the 831B situation. I think most of you are probably aware of the issues that are related to that as well. The IRS has been very careful in how they're working with that issue. In June, they resubmitted. The original proposal was basically to eliminate for most captives the opportunity to do the 831B election. That was, I think there were hundreds of responses to that, and thanks to you and your support in that, that was changed. The most recent one that I have seen anyway about the 831B is June 16th that came back from Senator Grassley's office. Once again, it's still allowing the change from 1.2 million to 2.2 million in premiums, and then it'll have an inflationary process of $1,000 increments in the future. But the restriction that was put into that has to do with who can own the captive, and it's basically set up so that if a natural person has an interest directly or indirectly, including through a trust, pass-through business entity, or corporation in the insurance company, and another natural person who is a family relation has an interest in the insurance contract issued by the insurance company. There's another provision which says if you own more than 5% as a relative, so to speak, then you're in the parent company, you're exempted from the exclusion. So that basically means a spouse, children, siblings, parents, grandchildren, no matter who they are, whether in a trust or a LLC or however it is, they could not, if they don't have that 5%, they would not be able to take the 831B exclusion. That's the most recent that I have heard. So I just wanted to bring that up to your attention and kind of let you see what was involved in that. So if it's all right, appreciate so much the opportunity to be able to share with you, and appreciate Pam and Mark in assisting with this. And John, if it's okay, we'll turn the time back over to you.
Thanks very much, Dave. The Utah legislation that formed the ability to underwrite captives in the state occurred in 2003. In late 2005, the Utah Captive Insurance Association was formed, and in early 2006, a slate of board of directors was added, and the board elected one officer, and I was elected that officer, and I've served in that capacity for most of the time since then, as have also the board of directors. There have been a few changes back and forth during all of that time, but not too many. It's as we've met in our association meetings, basically at the Western Region Captive Insurance Conferences, and talking with the members in good standing here in Utah, it's become apparent that we really need to upgrade and update, not upgrade, because the folks that have been serving are very good and have done an excellent job, but to update the board with some new folks. It has been a long-standing part of the Utah Captive Insurance Association, I'll just refer to it as the UCIA from now on, that the board will be populated by a majority of captive owners. When we first formed the UCIA, it was felt that if it was just an association of service providers, it wasn't really serving the needs of the captive owners as well. So it's written in the bylaws that a majority of the board will come from the owner community. We have set out nomination forms. A nomination committee was created to review the nominees, and we are now putting in front of you these names to serve from the owner roster. Everett Smith with Icon Health and Fitness, Mark Farmer with FJ Management, Richard Entz with Thatcher Company, David Broadbent with Ivory Homes, and Clarence C.B. Batts with AZO. 4 of these are Utah-based firms, ACO, is outside of Utah, but are all captive owners of a Utah domiciled captive. The next slide shows the list of providers that have been nominated. Ross Elliott, a former captive commissioner in the Utah Insurance Department, but now a consultant. Brandy Alderson with Marsh Captive Solutions. Bob Barker with Valley National Administrative Services. Ken Avery with Montera Captive Management. Norman Chandler with Taylor Chandler CPAs. Michael Shields with the Underwriters Group. And Scott Garduno with Taylor Walker Associates. The bylaws of the association allow for a maximum of 7 board of director members. So we ask those members in good standing to vote for 4 folks from the previous sheet and for 3 people from this particular sheet of the providers. Now, a confidential ballot will be emailed along with detailed bios, and these bios are they're roughly about a paragraph each of the candidates, and they'll be sent to UCI members in good standing, concluding this presentation. If there are those on the call that are currently not members of the UCIA, we certainly invite you to go to http://utahcaptive.com, and you'll find a membership application there under the appropriate slide areas. Now, after the board election takes place, rather than having one person that is running the business with an outside contracted party, and I should give a good shout out to Monique Avery, who has been helping with that and has just done a fantastic job over the last couple of years. We will be electing a new slate. The board of directors, I should say, will be electing or appointing a new slate of officers. This will likely run the way that many other organizations are. Each officer will serve for a year, and as they at the end of the year, there will be a natural progression. Secretary moves to treasurer, treasurer to vice president, VP to president. It's anticipated the president at the end of their one-year term will become an ex officio member of the board of directors, and that would be just not elected by the membership at large, but rather just someone that moves into that position. We feel this is much more in keeping with other nonprofit associations, and it should bring some new blood into the organization and help the UCIA move forward in a good manner over the next several decades. Now, I do want to give a little note on the Western Region Captive Insurance Conference. The UCIA has been a charter member of this conference since its inception in 2009. The conference, as many of you know, rolls around to the charter members of it, currently standing at the Arizona Captive Insurance Association, the UCIA, and the Missouri Captive Insurance Association. We are in constant discussions with other associations about joining on. We have hopes that others will participate as a sponsor member in the near future. The next version, the next offering, will be in Arizona. And as you can see on the slide, it will be at the the Scottsdale Resort at the McCormick Ranch. This is a beautiful ranch with a great golf course next to it. It's almost right in the heart of Phoenix, Arizona. Good amenities and plenty of restaurants that are close by to head out to, and some other extracurricular activities close by. The last conference that we had in St. Louis was a resounding success, and do invite all of you to participate in the next one that we have in May May 16th through 18th of 2016. So please mark your calendars and please set your times and book your reservations early. I believe we've come to the end of our presentation, our formal presentation. We do have plenty of time within our allotted hour for any questions.